This is the blog for Wednesday the 8th of August, so day 43 of 65 of the Compound Effect Challenge, making forward progress every day and applying my edge and method. Now when I look at something like this, it's all about building consistency and just following through and making sure the end result gets achieved. And now that we've hit quieter markets, yes, the trades might diminish a little bit because obviously less trades with less market movement. But it's really important to focus on the same trading plan and make sure we're sticking to the method. And at the end of the day, by forcing trades, all it could potentially do is just really create more damage and make more trades that would then have to make up if they then become losing trades. So I guess in the past, I remember going back a year or so ago when we'd have quieter times like this. It's almost like I try to force a trade or keep on taking the trades, but it's a good feeling to have a system created that you understand exactly where you need to enter, and you're just waiting for the model to produce that for you. And at the end of the day, if the model doesn't come up with anything, well, then it's just a matter of sitting on hands and waiting until the opportunity comes, and just really looking at over the space of a year and knowing that there's a result to achieve it in the year, and that will come. Here's the trading strategy, divided into three areas, looking for a continuation of the trend based on key areas. So those have been quite minimal because the market has been moving enough really to get round to testing those key levels, breaking the high and the lows. I mean, those sort of opportunities are present every single day, but really depends on what other markets are doing. And again today, there was quite a few times where it looked to break the high, but just there wasn't physically a setup because the full setup that I'm looking for wasn't achieved and all the boxes weren't ticked. So again, just really sticking tight to the system and knowing the model's going to produce what it needs to produce when the time's right. And then the pivot strategy. So there was one of these trades that came up today, and just looking for a change in direction, change in momentum, which we'll go through now. So on the daily charts, still definitely. I mean, what the daily charts is really good for is providing an overall direction. See very clearly upside since June. We're just making higher highs, higher lows. I mean, consistently just pushing up. But within these areas, there's certainly stages of where the market's sideways or even coming backwards. So at this stage here, I mean, it looks like this market's just pushing up. But if we were to bring over a 15-minute chart, here it is here. So this is the day we just looked at here. And what was quite significant is leading up to the day, I could see, and I've just marked it in here, there's this 1396 level, which over here with the market's really respected it quite a few times. There's a very significant level in the market. We got above it, then tried to bounce off it. We've then got underneath it. This is the first time leading up to the opening of the markets this week where the market's been a little bit building some downward pressure. Previously, the market was all about upwards movements. Came at the pre-market. By the time the market was opening, it was on the upside as well, and as a result, we've had some pretty strong upward mornings. This was the case this morning. We still had an upward morning, but there was certainly an opportunity to look at sell-offs, and until it started getting above this resistance area. And I'll take you through a trade that was potentially on the cards, which didn't eventuate, but was looking for it. But until this 15-minute chart provides a lot of assistance as far as knowing until we got above that level, really wasn't interested in any sort of buying trades because we're certainly on the downside until that's the case. Another thing about this chart is too, just about to the tick, it's rebounded off that trend line there too. So this trend line was drawn in well and truly before today existed, and it's come back here. We've touched it here, uses it as resistance here, uses it as support here, and then uses it as resistance here, and now uses resistance here again. And it's a trend line or vertical support resistance area that's acting. It's working really well in the market. So here's today's action. I've got these two dotted lines here are two key levels in the market. You can see 96 is there, 91's another one as well. Got these little arrows pointing to. I never actually in any of these arrows here never physically got an entire setup where I was waiting for an entry. But all these arrows do represent areas that were potentially closed and areas I was looking at as far as taking some sort of trade in the marketplace. And then Venture did get one trade, which I'll go through as well. Here's the order block or the price block for the day. So you can see in the pre-market, basically just so happens to be that it was reacting or bouncing right between two significant key levels or predetermined key levels in the marketplace. So of course it's quite easy to use that as the order block and establish that as the area where, if I'm looking for a direction for the day, and this is something I look at every day, I need the market to be pushing through and then using it as support, or pushing underneath and then using it as resistance. And of course then other markets are key to providing the final decision as to whether I take it. So if it's pushing through and all the markets going with it, that's confirmation the trends are going. Many times it will get outside the price block or the order block, breakout block, but if the other markets aren't following, which is around this case, they're not taking the trade. So with this particular day, it's just one of those ones where it wasn't particularly suited to a directional breakout because there was a real difference between the markets. Russell was trying to push higher, ES was trying to push higher, and Nasdaq was definitely more on the downside. If we bring up the Nasdaq for a second, so here it is here when even through here when this market's trying to break up to the upside, you can see in the Nasdaq how much it's well and truly broken to the downside. It's hanging around its lows and it's nowhere near its highs, whereas some of the other markets are sitting at its highs. So in that kind of case, they haven't got confluency with the other markets, and it's not like the other markets are supporting the upside here. So directional trade just wasn't on the cards in this particular situation. That's what that arrow there marks. This particular one here, this is what I talked about in regards to the strong resistance at 1396. The market popped up, came back here, looked like it wanted to, we've got a bit of a breakout trade forming here, but I didn't actually get an entry. But I thought if this breakout or this upside fails and starts coming back and placing pressure on this swing low area here, this is where I was looking to sell. So this is what I had predetermined in mind, that this is definitely an ideal spot for a reversal trade. Obviously the market hasn't come anywhere near this particular spot that I was looking at, and in the end the pressure continued on the upside, but there was solid resistance there, and if it came back and got a tick below this area, I'm sure there would have been some momentum or a push to the downside, but that's not to be. I didn't go anywhere near that in this particular case. So this and then again, sorry, and this is also marking a potential breakout trade. So this area here, the predictive's crossing up, looking for the market to push higher. You just also coincide with that directional breakout. But like I said, all the other markets just weren't indicating that a breakout was of a high probability. In this particular case, the ES was leading the other markets, or was leading to the upside, which is very rare. Most of the time you'll see the Nasdaq or the Russell moving ahead in front and certainly leading the other markets, but in this case the ES was doing that. So it wasn't that I was saying that it's not going to break out. I just thought I'm not prepared to take the breakout because it doesn't represent the area that I'm looking to trade. And when the ES leads like that, then there's nothing I can do about that. I need the other markets to provide that support and be the ones leading the ES through. So eventually it has got pushed through, but it's an area that I'm not prepared to trade because it doesn't represent my trading area. From there we've pushed up higher, we've topped out here, so this is this area where it bounced off that trend line almost to the tick, and then from there we started to push lower. Around here is forming potentially a breakout trade, but again, if again, as I'm looking at this area here, so this is a potential where it could break to the upside. Now I've identified a price in mind. Actually, the 1 minute chart shows a little bit better. This is the area I'm looking for, but this particular price level here, you can see the market's reacting to quite a bit. So the market's come up, this is where it's topped out, it's pulled back, and once it starts getting above this price level, look to buy. So you can, even if I take that line away, you can see, just if you quickly look at it, you can see distinctively there's an area there. The market stays above it, gets below it, stays above it, gets below it, and what's this trade up setup is looking for is the market to show some power, to get above it by 4 ticks, then come back, use that as support, and then it kicks from there. One of the key missing factors in this particular case is, are the other markets doing the same thing? Because obviously if all I'm going to do is just base it, set up purely on this market and purely on a bit of a price action movement like that, many times I'll get this sort of setup where it's up above like this, buy, it's just a false movement and ends up pushing down like it did. So I need confirmation by saying, okay, the other markets are all there as well, and actually some of them breaking through, which would be great. And you can see when I put my cursor over that particular area there, and even a bit further on, how much the Russell is on the downside. It's well and truly away from its highs. It's just not an area I'm prepared to take on board because there's no support there from the other markets. So a failed or no opportunity there, or no actual setup there as far as breakout. From there, what I'm looking at, this is either, it's a bit of a combination of both, and quite often this happens where I get a directional and a reversal trade setting up at the same area. So where an upside fails there, like I was talking back here, if it starts placing pressure on the area where it tries to push from, I'm looking at selling as it breaks through that area. So like I did down here, I'm looking for it if it came back to apply pressure to this area, I'm looking to sell. It just never got there. But this particular one, obviously it did. And there's also a directional setup, meaning that markets come up, push down, come back, made a lower high, and then it's placing pressure on that, that area where it tried to push higher from. And basically, as the predictive average is crossing down, I look to sell it. So it's like an early 5-minute sell. So the directional would have been at the end of this candle, or the reversal is as this market's breaking. So I actually took it as it was coming back a second time. So as this market was coming down here, there was a lot of momentum from the Russell, and of course if I see the other markets breaking through that point, that's when I'm looking to take it. So again, the reversal uses the same concept as the breakout trade. So I need that formation of the setup, but I need the confirmation to take it. If the other markets are just kind of sitting there or sitting up a bit higher, then I'm not going to take it up physically. I need the markets to actually be breaking that equivalent pivot area, and that's where I'm looking to get on board. So something I wanted to point out, and it's really interesting on the Russell. This is prime example. Actually, here it is here. So here's the Russell, and there's an example of this later on, a second area which I didn't take, and I'll walk you through that as well. But here's the Russell. So this is the equivalent thing. The market comes up, forms this pivot, makes a shoulder, starts breaking down. Okay, so what I'm looking at as the ES is looking to break down. Basically, I've marked it. So when the ES is just looking to break this pivot here, this is where the Russell was. Look how far down the Russell is. It's well and truly broken. The Nasdaq looks exactly the same. All the markets had well and truly broken the area, which is, it's almost getting looking into the future and telling you that where the market's going from there. It's easy to put on the sell order and look for a continuation through that area. So bought at 13.90, sorry, sold at 13.98.25. The trade actually went exactly 8 ticks, so it would have been a break-even trade, which I've put that down as. I actually took some contracts out at 5 ticks, so I'm starting to do that. So it ended up being on average about a 2-tick gain, but still I put it down as a break-even trade. But definitely an area I was lining up and had some profit targets for down around here, this level here. This one had a lot of momentum on the downside. If it started breaking this 96 level, then I was really prepared to let it run. But obviously with this pressure has certainly, it's pushed through, but then it's found a bounce here. That's this significant support line that keeps holding up, and that's where the market's eventually bounced from. So from that area there, we've come back up here. I mean, really expected it to hold and potentially push lower, which is what it eventually did, but there's no setup there for myself, so I'm just waiting and buying my time. Actually left the markets around about here. I had to finish up early this particular day, but as always, I go through the marketplace and I still want to show you a couple of things. I looked through here, there wouldn't have been any trades I took anyway, but this is an example down here of what could have potentially been a reversal trade. So you can see here's the pivot, this particular low here now. So the market's come up, it's tried to push higher, it hasn't been able to do that, and then it's come back, it's placing pressure on this pivot here, and it's broken through that. So again, if I'm just looking just to sell this exact area, or base it purely on the ES, then I would have probably been in a sell situation around about here. I mean, the fact is that it's sitting right on a support level too, so that changes it, but that support level aside, once the market breaks that area, looking to sell. But what I want to point out, and this is a great example of watching the other markets, what I've done is marked number 2. So this is the second trade I'm looking at. So you see the 2 areas there and there. So on the ES, here's the pivot area, here's the area that I'm looking to sell. Now if I look over at the Russell and see here's the pivot area, looking to sell, but here's the Russell, it's sitting well away from it, that pivot still. It's not even interested in breaking down, it's sitting up a lot higher. And the Nasdaq looks exactly the same. So you can see the ES was the only one putting pressure on this pivot area here. So regardless of the fact this is support and all those other things, the other markets alone was it was just basically a big flashing sign saying don't take it because they're not applying pressure on the downside there. So it would have been an easy one to leave, and that's exactly how I approach it as far as watching the other markets. From there, obviously this predictive average is crossing up here, so we're getting some sort of 5-minute buying, 5-minute selling situation set up where we can look at those potential areas around the key levels in the market. So by this stage, what I do is just to make it as simple as possible for myself, I just say whatever direction the moving average is pointing, that's the direction I'm going to take the trade. So in this particular case, the predictive average is crossing down and up. So if the predictive average is pointing up, I'll be looking for a 5-minute buy. If it's pointing down, I'm looking for a 5-minute fade. Just make it black and white, really simple that for myself. So what I need the market to do is actually push through this key level by 6 to 8 ticks, come back, use it as resistance, and then go lower. So that's sort of the concept of what I'm looking for. Obviously, it hasn't had enough to be able to push through this key level, and from there it's pushed up higher. So clearly no sort of sell signal, and I'm not taking a buy just because I'm simply with this particular trade area. I'm just following the direction of the moving average and just making it simple for myself. I could turn around and say, well, at the end of the day, while it's sitting above this support line, this is a great spot to be buying. Which I did do about, I had done that previously, probably 6 months ago, but what I found, it just provides too much discretion. There'll be a time like this again when it's maybe not so clear cut, and I'm trying to decide, okay, is this a buying area or is it a selling area? Am I going to base it on price action? Am I going to base it on moving average? It just starts to become very, maybe I'm not going to be looking at all the same areas then, so it's just too much discretion. So what I've decided is, when I'm looking at these trades based off key levels, which is my 5-minute continuation, 5-minute momentum trade, which is basically a format or a different version of the 5-minute buy and 5-minute fade trade. I just want to purely put all the emphasis on whichever way the moving average is pointing. So no setup there. So overall for the day, just the one directional or reversal trade, sort of the exact same setup came in the area there, and it's ended up going for a little bit of profit or break even trade. So that's Wednesday, and I'll speak to you guys on Thursday.